Another very powerful way to use the 0.618 level as an entry point is to look for those 0.618 retracements following a breakout of a consolidation period. If I go ahead and look here, we have a lot of consolidation going on. And if we just mark the lower bound of this consolidation, which can be done like so, notice how I used these points here, here, and then over here as well to mark the low points. And if I were to do the same for the high, I could just mark the high points of this consolidation as well to notice that we do get a bit of a symmetrical triangle. However, notice what happens when we get this breakout of the symmetrical triangle. We get the breakout of the symmetrical triangle right here. And then instead of entering just on the breakout of the symmetrical triangle, a great way to go ahead and find that entry is to just look for the recent retracement. Go ahead, go from relative high to low this time, and notice the 0.618 level is where we pull back to before seeing a continuation to the downside. So basically what you're going to want to do, wait for the breakout of a consolidation period, track the most recent move that occurred on the breakout. That would be this smaller move right here. Wait for that 0.618 retracement. And typically these 0.618 retracements will occur on the outside of the consolidation period. So that is a good way to know if you're tracking the correct move. See, if I would have gone ahead and tracked this entire move right here, the 0.618 level is on the inside of the consolidation period, and that's not exactly what you're looking for. But the fact that we have it on the outside over here shows for a very strong point to go ahead and take an entry and then play that to the downside. Even if we look at this next move right here, if I go ahead and just draw out a trend line, say if I go ahead and draw out the trend line right here, notice we have a trend line break that occurs right here. And then if you track the most recent retracement there, going from relative low to relative high, notice the 0.618 level acted as a very strong opportunity to go long to catch this rebounding move right here. So this works for both trend lines and consolidation periods. More favorably, it works better with the consolidation periods, but it does work quite well with trend line breaks as well and in change of trends. If we look over here, we of course, if we draw out this trend lines for the lower bound right here and the upper bound of this consolidation period, you'll notice that we have that rising wedge pattern. Now, where the Fibonacci retracement works quite well at is we get the breakout of the pattern. And if we go ahead and look at the retracement of this, we'll see that it retraces to the 0.618 before finding that continuation to the downside. So that retracement to the 0.618 level acts as a very strong and a lot more conservative of a play when you're playing consolidation patterns. Go ahead, just wait for the consolidation pattern to break out. Instead of entering right here, which you still can, you just go ahead and wait for the retracement to the 0.618 level. Now, a word of caution is that not all breakouts of consolidation patterns are going to retrace to the 0.618 level. However, it does happen quite frequently. And when it does, it just gives you a lower risk, higher reward play than if you're just to initially play the breakout of the pattern in general. So there's just something to look out for. And it is a very strong way to play consolidation patterns. And if we were to go ahead and just look at these simple trend line breaks, if we go ahead and just draw a trend line right here, you'll notice that we captured both of the highs that capture pretty much this entire downtrend. And when we do get a breakout of this downtrend, instead of entering just right here, it's best to wait for those retracements back to the downside. And if I go ahead and look at the retracement back to the downside, you'll see that the 0.618 level acts as a very strong level of support, very strong buying opportunity, and then that would allow you to capitalize on this very strong move to the upside while reducing your risk instead of just entering right here. Because you'll notice a lot that whenever you're looking at a trend line break, it doesn't just break through the trend line and go straight directly up. Typically, what does happen is it breaks through the trend line, consolidates for a little bit, and then pulls back to around this 0.618 before seeing the full move occur. Even on these longer channels, something like this, if I go ahead and just draw out a trend line to capture this channel right here, you'll notice that we do get a nice little trend channel right here. You can, of course, always enter on the breakout of this, but waiting for those retests are going to give you those lower risk plays. So go ahead and just draw the trend line, draw the Fibonacci retracement, enter on the 0.618, and you can play that move on the bounce back to the upside there. Sometimes it may not be stronger than the initial move, but it will give you a couple of points to the dollar nonetheless. And this does occur on all different time frames. If we go ahead and look here, you'll see on the 2-minute time frame, if I just draw a trend line to capture this consolidation period right here, you'll notice that we get that lower trend line break that occurs right here. And instead of entering right there and having to sit through this consolidation before seeing the clean move to the downside, it is a lot safer and a lot lower risk to higher reward trade if you go ahead and wait for that retracement back to the 0.618 level, where the clean move then follows from there. In future videos, we'll talk more about how to take profit and where to set a stop loss when entering here, but once again, we are just showcasing the 0.618 level as a turning point in the market.